Which company do you think is more financially stable, Boeing or Airbus? Today we dive deep into the financials of these aviation behemoths. Two names that have dominated the skies for decades, Boeing and Airbus, are not just manufacturers of commercial aircraft. They are symbols of national pride for their respective countries. Financial stability is a critical factor that can make or break a company. It's like the backbone of a business, providing the necessary support that allows it to stand tall amidst challenges. A financially sound company is more likely to withstand economic downturns, invest in growth, and deliver value to its shareholders. Now let's take a brief tour through the operations of these two giants. Boeing, an American multinational corporation, has a diverse portfolio that includes commercial airplanes, defense, space and security, and global services. By the end of the third quarter of 2023, Boeing had raked in a total revenue of $56 billion, with its commercial airplane segment contributing a significant 42%. On the other hand, Airbus, the European aerospace titan, has a more geographically diversified revenue structure. With total revenues of $47 billion at the end of the same period, it drew the highest proportion of its sales, 37% from Europe, followed by Asia Pacific and North America. However, revenue is just one side of the story. Profitability and returns, asset-based liquidity, and operational efficiency are equally vital in assessing a company's financial health. Gross profit margins, net profit margins, return on equity, return on assets, total assets, equity, current ratio, quick ratio, inventory days, accounts receivable days, total assets turnover, and cash generated by operating activities are some of the key metrics that can provide a comprehensive view of a company's financial stability. In this analysis, we will examine their financial data, comparing revenues, profit margins, return on equity, assets, and operational efficiency. We'll peel back the layers to see which of these two aviation giants, Boeing or Airbus, has a stronger financial footing. So, buckle up as we prepare for takeoff on this financial journey. Let's kick things off with a look at the total revenues for both companies. By the end of the third quarter of 2023, Boeing had amassed a total revenue of $56 billion, while Airbus pulled in $47 billion. Now, let's delve a bit deeper into how these revenues were generated. For Boeing, 42% of their revenue came from Boeing commercial airplanes, with Boeing Defense, Space and Security contributing 33%, and the remaining 26% coming from Boeing Global Services. Essentially, Boeing's revenue is primarily sourced from their airplane production and related services. On the other hand, Airbus has a more geographically diversified revenue structure. 37% of their revenue comes from Europe, 28% from the Asia-Pacific region, 21% from North America, and 6% from the Middle East. This suggests that Airbus has a more global customer base, which may provide them with a certain level of resilience against regional economic downturns. Interestingly, while Boeing's total revenue is higher, Airbus's revenue is more evenly distributed across multiple regions. This could potentially make Airbus less vulnerable to region-specific economic factors and more resilient in the face of global economic fluctuations. Moreover, the differences in the revenue structures of these two giants might be reflective of their strategic focus. Boeing seems to rely heavily on its aircraft manufacturing and related services, while Airbus appears to have a broader focus, serving a more global market. In conclusion, both companies have their strengths. Boeing's total revenue is higher, but Airbus's revenue is more diversified, which could potentially provide a buffer against economic uncertainties. So, while Boeing has a higher total revenue, Airbus demonstrates a more diversified revenue structure. Next, we delve into the profit margins and returns of these aviation giants. Boeing's gross profit margin for the third quarter of 2023 stands at 9%, while Airbus boasts a higher margin of 15%. However, the net profits paint a starkly different picture. Boeing faced a net loss of $2 billion, resulting in a negative net profit margin of -4%. In contrast, Airbus saw a net profit of $3 billion, with a net profit margin of 5%. The primary cause of Boeing's consistent net losses can be traced back to recurring issues with their aircraft, notably the technical faults of the Boeing 737 MAX 9 in early 2019 that led to a global flight ban. These incidents not only tarnished Boeing's reputation, but also inflicted severe financial damage. In terms of return on equity and return on assets, the contrast between the two companies is equally striking. Airbus's return on equity is a robust 20%, and its return on assets is 2.6%. Boeing, however, has a return on equity of 0% and a negative return on assets of minus 2.2%. You might wonder why we've listed Boeing's return on equity as 0%. In a typical calculation, Boeing's return on equity would be 18%. However, both Boeing's net profit and equity are in the negative. This results in a misleading figure that could cause confusion. For clarity and accuracy, we've listed Boeing's return on equity as 0%. Despite higher revenues, Boeing's financial health is compromised by their negative net profit, while Airbus maintains a healthier profit margin and return on assets. The challenges that Boeing faces underscore the importance of not just generating revenue, but also managing costs and risks effectively. On the other hand, Airbus's figures reflect a well-managed company that's not only making sales, but also turning those sales into profit. Now let's turn our attention to the company's assets and liquidity. First things first, let's talk about total assets. Both Boeing and Airbus are operating with substantial assets. Boeing's total assets come in at a whopping $134 billion, while Airbus trails just behind with assets valued at $133 billion. But here's where things get interesting. When we look at equity, or net assets, Airbus outshines Boeing. Airbus has positive equity of $17 billion, while Boeing, on the other hand, has negative equity, coming in at negative $17 billion. This means that Airbus has more resources that are fully owned by the company, which gives it a stronger financial foundation. This is further highlighted by the equity to total assets ratio. Airbus's ratio is 13%, which is a healthy ratio, indicating that a significant portion of its assets are financed by its shareholders. Boeing, however, has a negative ratio of negative 12%, indicating that its liabilities exceed its assets. Now, let's delve into liquidity analysis. The current ratio measures a company's ability to pay short-term obligations, or those due within 1 year. Both Boeing and Airbus have similar current ratios, with Boeing at 1.15 and Airbus at 1.16. This suggests that both companies have a similar ability to cover their short-term liabilities with their short-term assets. But what about the quick ratio, which is a more stringent measure of liquidity as it excludes inventory? Airbus again takes the lead with a quick ratio of 0.51 compared to Boeing's 0.3. This indicates that Airbus has a better ability to quickly cover its immediate liabilities without relying on the sale of inventory. While their total assets are comparable, Airbus's positive equity and higher quick ratio indicate better financial stability. Finally, we examine the operational efficiency and cash flows of Boeing and Airbus. First off, let's talk about inventory days. This metric tells us how long a company takes on average to sell its inventory. For Boeing, this is 418 days, while Airbus sits at 258 days. This means Airbus is more efficient at selling its stock, which could be a result of better demand forecasting or more efficient production processes. Next, we have accounts receivable days. This is the average number of days it takes a company to collect payment after a sale has been made. Boeing sit at 13 days, significantly lower than Airbus's 31 days. This could suggest that Boeing has a more efficient collection process or perhaps more stringent credit terms for its customers. We also look at total assets turnover, which measures how efficiently a company uses its assets to generate sales. Boeing's turnover is 0.55 rounds, slightly higher than Airbus's 0.48 rounds. This indicates that Boeing may be slightly more efficient in using its assets to generate revenue. Now, let's talk about cash flow. Cash is the lifeblood of any business, and the amount of cash generated by operating activities is a key indicator of a company's financial health. Boeing generated $3 billion, while Airbus generated $2 billion. This means Boeing is generating more cash from its regular business operations. However, we also need to consider free cash flow, which is the cash a company generates after accounting for capital expenditures like buildings or equipment. Boeing's free cash flow is $1 billion, while Airbus's is $420 million. Although Boeing has a higher free cash flow, it's important to note that Airbus's free cash flow is positive, indicating it has cash left over after paying for its capital expenditures. Although Boeing generates more operational cash, Airbus's superior operational efficiency and positive free cash flow highlight its stronger financial performance. To wrap up, let's review our findings. We've embarked on an in-depth financial journey with two aviation giants, Boeing and Airbus. Boeing, despite its higher revenues at $56 billion, has shown financial vulnerability with a gross profit margin of only 9%, a net loss of $2 billion, and a 0% return on equity. Not to mention operational efficiency measures such as inventory days and quick ratio raise concerns about Boeing's ability to manage its resources effectively. On the other hand, Airbus, with total revenues of $47 billion and a gross profit margin of 15%, exhibits a more robust financial health. Airbus's positive net profit, 20% return on equity, and efficient operational measures imply a more stable capital structure and stronger cash flow generation. While Boeing maintains higher revenues, Airbus's diversified revenue structure, positive profit margins, better return on assets, and stronger operational efficiency indicate a more financially stable company. Stay tuned for more in-depth financial analyses. Thank you for watching.